On this channel, I often talk about using your stock trading account for income and eventually even living primarily off of your stock trading income, which I've been doing myself for over a year and a half now. But in order to do that successfully, there's one extremely important thing that you have to get right. So in this video, we're going to talk about that. My name is Charlie, and on this channel I make videos about building wealth and achieving financial freedom so that you can free up your time to focus on the things that you truly care about. So again, this video is based on the assumption that you're already generating income trading stocks and specifically selling covered calls. So if you haven't seen my full covered call tutorial, I would recommend that you check that video out first. But today we're going to talk about emergency funds, which may not sound like the most exciting topic, but having a proper emergency fund is nearly as important as your brokerage account itself when it comes to living off of your stock trading income. And when I say emergency fund, I just mean some type of cash reserve, whether it be a savings account, checking account, or an actual physical reserve of cash if that's how you like to do it. It doesn't matter how you store it as long as the money isn't being invested so that it doesn't fluctuate in value, and it's completely liquid, meaning that you can withdraw it at any time. And in short, the reason that you need to have a fund like this is to protect yourself against a market downturn. Because when the market is doing well, it's easy to bring in 3 to 6% per month selling covered calls, but as we all know, the market doesn't always go up. And while you can still generate premium during a bear market, you won't be able to generate as much as you could during a bull market, and your account value will still be decreasing in value pretty significantly, just due to the value of your stocks decreasing. So the last thing you want to have to do is sell your stocks at a loss and withdraw from your account while it's down in value. But if you have an emergency fund, you can withdraw from that while the market is down to cover your everyday expenses, and then continue withdrawing from your brokerage account once the market recovers. So by doing it that way, you don't have to panic and sell your stocks when the market starts to dip, because you know that you'll still have enough money to live off of. And as long as your companies are still relatively fundamentally strong, and you think that they'll still be doing well on the other side of this downturn, you can simply hold on to your stocks and wait it out. Now, like I mentioned, it doesn't really matter how you store your cash, but personally I think it makes the most sense to keep it in a high interest savings account. For mine, I use WealthFront, and the interest rate that they can offer just depends on the interest rates that the Federal Reserve sets. So right now, with interest rates being so low, you're only getting about 0.1% annually, so not very high interest, but it'll increase again as interest rates rise over the next few years. So generally, a high interest savings account like this is going to be your best bet for storing your cash. And at the very least, with interest rates at normal levels, it should help you to keep up with inflation. Now, the next most important thing to consider is how much cash you should keep in this account, and that'll depend a lot on your individual needs. So if you're using your stock trading account as your sole source of income, you'll probably want at least 2 years of expenses in your emergency account, just so that if we hit a long-lasting market downturn, you should be completely covered. But for example, if you're working a part-time job, so you still have some income outside of the stock market, or if you're working on building up your own business like I'm doing, and then just using your stock trading income to supplement that in the meantime, you may only need about 6 to 12 months worth of expenses in your emergency fund. Basically, the idea is that you should have enough in your emergency fund to cover all of your expenses during a market downturn so that you don't have to sell any stocks while they're down in value. But also remember, you should still be collecting premium even while the market is down, so you will still have some income from your portfolio. It just won't be as much as you're bringing in during a bull market. So for that reason, having an emergency fund with the amounts of money that I just mentioned is pretty conservative, but I think that if you're depending on this money to survive, it's a good idea to be conservative. And it's also important to remember that this account is only for that situation when the market drops in value and you still need income to live off of. So it's not for paying taxes, not for unnecessary expenses, not for putting back into the market on a dip. Basically, you should just never withdraw from it unless you absolutely have to. So I've often seen people say that they don't think it's possible to live off of just a couple $100,000 as I say it is, but if you have this emergency fund to cover you during the market downturns, it's really not hard to do. You just have to be smart about it and stick to your discipline, and you should be just fine. So now, if you haven't seen my full covered call tutorial, which again is the main strategy that I use to generate income from my portfolio, I'd recommend that you check that video out in the bottom right corner of the screen. Thanks for watching, and I'll talk to you all in that next video.